Hello and welcome. I am Tom Craner, and this is Tom's Take. We are seeing the markets drop dramatically in the last few days, with the catalyst all centered on the new tariffs announced on Wednesday. There are endless stories about how damaging this will be to the economy, though it should be noted that there are just as many stories and very valid reasons that this could be very beneficial, specifically to the U.S. economy and U.S. corporate earnings. We have mentored our clients and taught you to ignore all the fearmongers and shrug off short-term fluctuations in the markets. Time and again, this strategy has been accurate and very effective at navigating these types of market fluctuations. In fact, this has been 100% accurate for this firm and its founder for 40 years. This is yet another emotional reaction on Wall Street, fueled by dramatic political overtones. We are more than confident that this volatility and reaction will be very short-lived, like so many other examples in recent history. Just 2 weeks ago, my previous Tom's Take took you through all the market events in the last 15 years, each brimming with all the usual fear and drama, and each fading fast as the markets recovered and hit new highs once again. We are confident that this is yet another one of those events. History offers a calming perspective here. Tariffs are not a new invention. They've been part of global trade for centuries, though often with less fanfare than today. Before 2017, the EU slapped a 10% tariff on U.S. cars and up to 50% on poultry, while China levied 15 to 25% on our cars, barriers that shaped trade, though did not break it. Under Obama, the U.S. quietly kept a 25% quote-unquote chicken tax on light trucks dating back to the 1960s and added duties like 35% on Chinese tires in 2009. These moves nudged prices up, but the economy rolled on. Biden kept many Obama and Trump-era tariffs, tweaking them for leverage rather than headlines. The point? Tariffs have long been a tool, sometimes a nudge, sometimes a shove, but rarely a disaster. Media stories on the tariffs want you to believe that this time it's different, and this could be the catastrophe that will end the U.S. economy. We reject that notion full stop, and here's why. Alongside the tariff buzz, incredible developments are unfolding, ones, albeit barely making the news. In the past few months, Apple, Taiwan Semiconductor, Hyundai, Eli Lilly, Merck, the Saudi government, SoftBank, and dozens of others have pledged nearly $4 trillion to build manufacturing, operation centers, and facilities in the United States, promising millions of new jobs. 2 automakers even scrapped plans for Mexico to build here instead, all tied to these tariff policies. For its part, Canada is now rethinking its decades-old tariffs on U.S. goods, with officials this week signaling a push for zero-tariff trade both ways. For the first time in decades, we are seeing countries like India, Israel, Japan, and others willing to negotiate, giving opportunity for U.S. companies to access their markets with little or no tariffs. If you look at all the circumstances, positive and negative, there are valid points on both sides. Could tariffs be damaging and destructive? Yes, they could be, though the outcome is still unfolding. Could trade negotiations as a product of these tariffs be beneficial and create a huge economic boom? Absolutely, and it's already happening. Will countries quickly negotiate for a much better trade arrangement for both sides? Yes, and it's already happening. Look at Canada's recent pivot. Will U.S. and international corporations move their manufacturing and operations to the U.S. to avoid tariffs? Yes, and it's already happening. Will this new tariff policy create a trade war? Yes, possibly. This could happen, and it's the biggest reason for all the uncertainty. One thing to keep in mind, however, is that the United States has the largest economy and is the biggest buyer and consumer of all products worldwide. For this reason, the newly announced policies are very likely to create better trade agreements with lower tariffs on both sides, and a huge boom and renewal for U.S. manufacturing and new and better jobs. Is there uncertainty? Of course there is. This is why you are seeing Wall Street react the way they are this week. We follow numerous economists and analysts on this issue, and our assessment is that there are not systemic threats or damage to the economy like you would have seen in 2008 or 2001 and 2. We believe this new tariff policy is creating short-term uncertainty, yet has the potential for massive economic growth and positives for our country and the world economy. We just want to remind you all of this. At a time of uncertainty and volatility, reaction is your enemy. Remain calm. Stop looking at the short-term fluctuations. Live your life and relax. This is Tom Craner. We'll see you next time on Tom's Take. Advisory services offered through Strategic Planning Group, a registered investment advisor with the SEC.